Welcome to the Money Magnet Mindset. If you have ever wanted to invest like a pro, then today's video is for you. We are diving into the investing wisdom of Peter Lynch, one of the most successful fund managers in history. During his time at Fidelity's Magellan Fund, he achieved an astonishing annual return of nearly 29% from 1977 to 1990. His insights are timeless. And in this video, we are breaking down his top 10 quotes to help you become a smarter investor. Stick around until the end because the last quote might completely change how you see stock market downturns. Let's get started. Quote 1. Know what you own and know why you own it. This is one of Lynch's most famous pieces of advice, and it sounds simple, but most investors ignore it. When you buy a stock, you are buying part of a real business. Ask yourself, what does the company do? How does it make money? Why does it have an advantage over competitors? If you cannot answer these questions, you should not own the stock. Quote 2. The real key to making money in stocks is not to get scared out of them. Stock prices go up and down, sometimes dramatically. Many investors panic when their stocks drop and sell at a loss. But successful investors like Lynch understand that market fluctuations are normal. If you sell every time the market dips, you will never see the long-term benefits of compounding returns. Quote 3. Behind every stock is a company. Find out what it is doing. A stock is not just a ticker symbol or a line on a chart. It represents a real company with real earnings, real customers, and real potential. Instead of focusing solely on stock prices, focus on the business itself. Is it growing? Is it profitable? Does it have a loyal customer base? If the business is thriving, the stock will eventually reflect that success. Quote 4. Invest in what you know. If you work in an industry, you probably understand it better than most of the analysts. You might notice trends before the general public does. For example, if you're a software engineer, you might recognize promising tech companies early on. If you work in retail, you might notice which brands are becoming more popular. Use this knowledge to your advantage and invest in businesses you genuinely understand. Quote 5. Big companies have small moves. Small companies have big moves. This is Lynch's way of saying that smaller companies often have higher growth potential. If you want higher returns, consider investing in small and mid-cap companies with strong fundamentals. These businesses often have more room to grow and can provide significant gains over time. Quote 6. Go for a business that any idiot can run because sooner or later, any idiot probably is going to run it. Companies with strong fundamentals and simple business models tend to perform better over time. If a company requires a genius CEO to succeed, it is a risky investment. Look for businesses that can survive leadership changes, economic downturns, and competition. A strong company should have a business model that works regardless of who is in charge. Quote 7. The best stock to buy is the one you already own. Many investors make the mistake of constantly searching for the next big stock instead of focusing on the winners they already own. Quote 8. Far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in corrections themselves. Quote 9. If you cannot convince yourself, when I'm down 25%, I'm a buyer, and banish forever the idea of selling a stock simply because it is down, then you will never make a decent profit in stocks. Quote 10. You get recessions, you have stock market declines. If you do not understand that is going to happen, then you are not ready, you will not do well in the markets. If you found this video helpful, make sure to hit the like button and subscribe for more investing insights. Which of these quotes resonated with you the most? Let us know in the comments. Thank you for watching, and see you in the next video.